While the world is distracted by the next artificial intelligence bubble, the illusion of decentralized finance, and the daily volatility of the stock market, the smartest and most ruthless money on Wall Street has quietly pivoted toward a terrifying new frontier. Forget about gold, forget about Bitcoin, semiconductor chips, or commercial real estate. The elite 1% of the global economy are currently executing the most aggressive and secretive accumulation of wealth in modern history. They are doing it by seizing the one physical resource you literally cannot survive without. Billionaires, sovereign wealth funds, and private equity giants are actively buying up global groundwater basins, senior river diversions, and vast tracts of seemingly barren land. They are systematically transforming a fundamental, life-sustaining human necessity into the 21st century's most lucrative, tightly controlled asset class. We are witnessing the birth of the water gold rush. If they succeed in their current trajectory, your access to basic hydration will no longer be considered a fundamental human right. It will be a luxury commodity dictated by the ruthless mechanics of liquid capital and algorithmically driven pricing models. Welcome to Fiscal Forensicist. Today, we are pulling back the curtain on the silent, global takeover of our fresh water supply, exposing the financial architecture of this monopoly. To understand the sheer scale of this quiet economic migration, we have to look at the data leading into 2026. Over the last few years, there has been an unprecedented massive spike in the acquisition of agricultural land by private equity firms and institutional investors. At first glance, the financial media frame this as a bet on the global food supply. But when financial forensic investigators look at the actual ledgers, a much darker reality emerges. These megafunds do not care about harvesting almonds, growing alfalfa, or feeding the population. They are buying the land entirely for the underlying aquifer rights and the surface water allocations tied to those specific deeds. Elite investors are strategically shifting their capital away from the unpredictable nature of tech stocks and pivoting toward the ultimate macroeconomic safe haven, a resource with absolute, guaranteed, inelastic demand. In economics, inelastic demand means that no matter how high the price goes, the consumer has no choice but to pay it. You can choose not to upgrade your smartphone, delay buying a car, or eat cheaper food, but you cannot choose to stop drinking water. Wall Street has realized that capturing the water supply is the ultimate form of leverage over the middle class. This marks the terrifying transition of water from a localized public utility to a high-yield financial instrument traded on global commodity desks. But how exactly are private firms legally executing this massive takeover without triggering immediate government intervention or widespread public outrage? The answer lies in the exploitation of incredibly archaic legal frameworks, specifically a Western United States property concept known as the doctrine of prior appropriation. This law was established back in the 19th century during the original gold rush, and it operates on a brutally simple premise: first in time, first in right. Whoever was the first person to divert water from a river for a beneficial use owns the senior right to that exact amount of water forever. In the modern era, this creates a bizarre and dangerous legal loophole. A small legacy farming operation established in 1880 might hold the senior rights to millions of gallons of river water, while a neighboring modern city of 2 million people holds only junior rights. When a drought hits, the city has to cut water to its citizens while the farm gets its full allocation. Modern private equity firms understand this legal vulnerability perfectly. They have deployed armies of lawyers and sophisticated shell companies to quietly purchase these distressed, historic farms. They approach families who have farmed the land for generations, offering them massive, above-market cash buyouts they simply cannot refuse. Once the private equity firm owns the land and the senior water rights attached to it, they execute a strategy known in the industry as buy and dry. They completely shut down the agricultural production, strip the land bare, and lay off the local workers. They take that massive allocation of senior water rights and divert it. They lease it to the highest bidder, whether that is a sprawling suburban real estate developer, a massive industrial data center that needs millions of gallons for cooling its AI servers, or a neighboring municipality desperate to keep its citizens' taps running. By using these archaic laws, billionaire-backed entities are systematically bypassing public oversight and controlling the literal flow of life to entire regions before local governments even realize the shift has occurred. This aggressive commodification brings us to the most dystopian financial mechanism of the 2026 water crisis: the concept of water banking. For decades, Wall Street struggled with how to physically hoard water. You cannot easily transport millions of gallons across the country, and building massive new surface dams is environmentally and politically impossible. So financial engineers found a loophole beneath our feet. Through a process called aquifer storage and recovery, private consortiums capture massive amounts of water during wet years and heavy flood seasons. But instead of leaving it in public reservoirs, they pump it deep underground into privately controlled depleted aquifers. They treat these subterranean geological formations exactly like offshore bank accounts. They hoard the liquid capital in the dark, waiting for the inevitable shift in the climate cycle. When the next severe multi-year drought strikes and public surface reservoirs dry up into cracked mud, these private water banks suddenly hold the monopoly on survival. They pump their hoarded water back to the surface and sell it to the public, to local utilities, and to desperate agricultural districts at predatory, astronomically inflated rates. This is the birth of a new hyper-modern form of feudalism based entirely on resource access. Urban centers that previously relied on cooperative state-managed utilities are becoming dependent on private corporate entities just to maintain basic sanitation and drinking water. Institutional investors are no longer just looking at quarterly profits. They are prioritizing water-rich portfolios as the ultimate geopolitical and economic hedge against climate instability. They are literally profiting from engineered scarcity. Wall Street has now fully securitized this crisis with the expansion of water futures trading, where speculators can bet on the future price of water in drought-stricken regions. When hedge funds can legally speculate on the scarcity of a life-sustaining resource, they are financially incentivized to see that region fail. The financialization of water creates a perverse incentive structure where corporate profit is directly correlated with public suffering. As this shadow monopoly expands, public sovereignty is eroding at an alarming, irreversible rate. Behind closed doors, secretive corporate lobbying efforts are working relentlessly to reshape international and local laws. They are actively pushing to delist water as a fundamental human right in several jurisdictions. Their argument is that water must be treated as an open market commodity to ensure efficient distribution and to prevent waste. But efficiency in Wall Street terms simply means routing the resource to whoever can pay the highest premium, ignoring the survival needs of lower-income communities. They even use environmental, social, and governance frameworks to mask this takeover by packaging water monopolies into green investment funds. It is the ultimate form of greenwashing, allowing them to extract massive profits while maintaining an illusion of corporate social responsibility. When private interests control the taps, democratic governments lose their primary leverage for managing public health, urban planning, and industrial growth. If a city wants to build affordable housing or attract new manufacturing jobs, they now have to negotiate with a private equity firm for the water required to sustain that growth. The balance of power shifts from elected representatives to the unelected boards of shadow banks. Localized economic destruction is catastrophic for small-scale legacy farmers, rural communities, and independent agricultural producers. They are being priced out of their own land and their heritage. As the cost of leasing water skyrockets to meet Wall Street profit margins, the price of water exceeds the annual production value of the crops. Family farms go bankrupt and corporations absorb remaining assets at a discount. The middle class dries up, leaving a monopolized landscape controlled by a handful of megacorporations. But the ledger is not completely closed, and the outcome of this resource war is not yet finalized. A decentralized movement of water monitoring and public advocacy is rising across the country. Citizens, investigative journalists, and local whistleblowers are fighting back to remunicipalize local water basins. Independent watchdogs use advanced satellite imagery, open-source intelligence, and decentralized data tracking to monitor resources in real time. As individuals, we are no longer powerless and must actively track land use changes and shell company acquisitions locally. The ultimate solution requires a massive, coordinated legal paradigm shift in 2026. We urgently need legal frameworks that permanently categorize all groundwater and surface water as an unalienable public trust. We must close loopholes that allow billionaire-backed shell companies to sever water rights from the land. The water wars are fought with leveraged buyouts, futures contracts, and lobbying dollars in corporate boardrooms. Once you learn to read the ledger, the extraction of your wealth and resources becomes glaringly obvious. It is time to follow the money, understand the monopoly mechanics, and protect the resources that guarantee our survival. Subscribe to Fiscal Forensicist and join us as we continue to track hidden capital, expose the financial architecture of the global elite, and teach you how to read the true code of the global economy.